welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Vinny Motiwala. And viewers, this is the show where you get all your stock-related queries answered by the experts. We'll also tell you what interesting topics we have got for Buy Now, Sell Now lens today. But before that, let's have a look at what the markets are up to. So, Vinny, feels like once again the bears are taking the charge of the Indian markets.
Absolutely. Yesterday we did see a bit of an exciting move there, at least tried to be on the green side, but today it's again back on the red. As of now, when you're looking at the markets, trading almost near the day's lowest point. Let's look at what the Nifty is doing. 18,220 around those levels. Day's lowest point, like you can see, down around 0.4% in trade. Sensex 2 performing in similar lines with Nifty as well, down 0.4% in trade. While the mid-cap space and the broader market side, which we had seen an outperformance coming in. So on the small cap space, yes, there is still that outperformance going in. It's up almost 0.3% in trade. But the mid cap space, that gain that we've seen coming in, that is coming off as well. And mid cap space is down almost 0.4% in trade. Sectoral wise, let's look at some of the sectors which are among the top laggards. We have Nifty Media, which is down almost 1.7% in trade as of now. So yes, that's the top laggard there. Then we have the realty space, that was buzzing in trade the last couple of sessions. Seems like that has given up those gains as well. Let's pull up the charts of something like an Oberoi Realty, DLF. What is happening to those stocks in trade? That is something that we're keeping an eye out on. Oberoi Realty came out with its numbers. This one is down almost 6%. DLF2 today is giving up those gains that we saw coming in for the stock post its numbers. IT space too among the laggards coming in this morning as well. Among the gainers on the Nifty, we have Auto as well as the FM. Actually, Auto is the only one which is holding on to some bit of a green there, mild green coming in there. That's what the setup is looking like today in the markets, Shrishti. Nothing exciting of a sort. As of now, Nifty at the day's lowest point.
But when you look at the space that is exciting in today's trading session, and that is the electronics manufacturing companies. See the likes of Amber Enterprises as well as Kaynes Technologies, and all these counters are definitely buzzing and soaring high. And you can see the momentum picking up for Amber as well as Dixon Technologies as well. So we'll shift focus onto what exactly is happening into this particular space.
Absolutely.
Vinny, would you like to share some more points?
Absolutely. These third-party contract manufacturers that we've seen coming in, as of now, yes, Dixon is yet to report its numbers. They will be coming out next week, but we have numbers coming in from Amber Enterprises, which is a third-party contract manufacturer for especially in the RAC and AC segment that they do in. Kaynes has a wider base as well, more similar lines to Dixon Technologies. So Kaynes and Amber Enterprises, both of these have reported a very strong set of numbers. When you look at just the growths coming in for Amber and Kaynes, it's at 55% in terms of revenue growth for Amber. Similar lines, Kaynes is also 53% growth. Also, we have in terms of commentary that has come in from Amber Enterprises also, they are talking about, how they have been increasing share in the RAC and RAC component space as well, expecting faster growth in FY24, and this has come in the press release with the earnings of the company. They're expecting mobility application division for Amber Enterprises to see a 15 to 20% growth in FY24. So they're expecting strong growth even in electronics and motors division as well. FY24 bullish commentary is coming in from Amber Enterprises. We were also joined by the management of Kaynes Technology on ET Now, and obviously the management did sound quite bullish there as well. So obviously the valuations are not too high in terms of that. All these are in the range of around 25 to 30 is what the valuations are looking at for all these companies where they look at Amber, Kaynes Technology, Syrma SGS, let's keep that also in this, as well as Dixon Technologies. So let's keep an eye out on that. Strong numbers as of now. But like I was talking about Kaynes Technology, we did have the management who joined in with us and they gave a very bullish commentary in terms of that as well. We had Ramesh Kannan, MD at Kaynes Technology, as well as Jairam Sampath, the CFO at Kaynes Technology, talked to us as well. So strong commentary there. Let's go cross and listen to just a small snippet of that.
We are growing on the industrial side and the automotive side. Automotive, more and more electronics is coming in. EV is adding to this, and we are in a good position placed with our customers. We have got good RFQs. Even railways, last 2 years was not much high, but this year we should be able to do a big number in the railway sector too. So overall, our growth comes from these three sectors. Medicals, we are having a lot of RFQ. It may not take place this year. It will take place only next year.
Right. Jairam, if I could get you in the conversation, because you had guided for a 1700 crore rupee top line for FY24. Given the bullish sounding Ramesh here, you think that remains intact, or is there a chance that you could even better that?
See, I think it's better to deliver now that we have kind of communicated to the market that we are generally in a good business model, and also the market is also doing well. So I think we'll leave the job of projections to the experts. We will do our work, and I think we maintain that. But however, I can tell you that we will have better leverage, operating leverage. So
Okay, so that was the management of Kaynes Technologies. After a good set of numbers, the management commentary remains strong, and the rub-off effect you can see in the overall sector, wherein Amber Enterprises is soaring high with the gains of around 10%, and even Dixon Technologies is holding itself in the green. Let's try and find out among the 3 to 4 players that are seeing good momentum, any of them can be a good buy at the current levels or not. How are the charts looking like for all of these? And onto the show, we are being joined by Kunal Bothra. Hi, very good morning, Kunal, and welcome to the show. What's your take on all these counters that are soaring high despite the fact that the markets are trading in red? Any of the counters amongst the 4, be it Kaynes Technologies, Dixon, Amber, or Sirma SGS, any of the counters that you wish for a buy at current market price?
So good morning, Srishti. Good morning, everyone. I'm not sure that whether at the current market price I would be looking to buy these names or initiate a buy, because as it is, the markets are going through a bit of a risk-off mode where you're seeing some cooling off from the large cap names. Eventually, that should trickle into the mid cap end of the market as well. Now, the catch with these kind of names is that the likes of Amber, for example, these stocks have opened up with a gap for themselves. So today there has been a major gap which we've seen for these stocks. Now, eventually, this gap could probably be filled over the next maybe couple of weeks. So I think a better strategy or a better entry point for these stocks, whether it's Sirma SGS, whether it's Amber, whether it's Kaynes, would be to try and wait out for this partial closure of the gap which has been created, and that could be a good entry point. For example, today the gap for Kaynes is around 1020 at the lower end and 1065, 1070 at the higher end. So if it comes say closer to that 1070 mark or slightly below those levels, that could be a better entry point to buy the stock rather than at current levels.
Okay, that's the view coming in from Kunal on these names. You know, that gap is there. That is what should watch out for, before entering into these stocks. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere, because we are going to be back and we will be taking all your stock related queries after this break. Welcome back, and you're watching Buy Now Sell Now on ET Now. Let's get started with all your stock related queries. Viewers, you can send us your queries either on the number, on our WhatsApp number that will be flashing on your screens, or you can send it to us on our digital page on Twitter as well. So do send us your queries. Let me get started then with the first query, and this first query I'm going to be taking. This one is on a put call, Kunal, coming in from Karan Bedi. SBI 570 put option is what they have. 3 lots, May expiry at 6.30 levels. What should they be doing with this? Continue to hold this or look to sell it?
Well, you can continue to hold on if you are eyeing some sort of a correction on the stock as well as say in the bank Nifty. There could be a mild cool off which could happen, but I think it's better to have a stop loss for this trade. Current price for the option is around 4.7 if I'm not wrong. Maybe you can keep the last 2 days of low as an average 3.2, 3.3 as a stop loss and hold on to the put option as of now.
Okay, moving on to the next query. The question is from Akhil, and Saurabh, hi, very good morning. He actually wants to know amongst the 4 counters that he has mentioned, which one could be the best buy at this time, and all of them are the recent buzzers. One is ITC, Syngene, DLF, as well as Cummins. So what's your advice on this?
See, among the 4 stocks, ITC looks good to me. If you look at the numbers are quite promising. All the business verticals are doing extremely well, and there is also a demerger story which is going to unfold in a year or two. I mean that will further unlock shareholder value. So from long-term perspective, I think ITC is among the best. Is the best among the lots.
Okay. Let's move on to the next query, and this one is on ABFRL. Kunal, Pushpa Pavini from Mysore is holding 6,000 shares of ABFRL at an average price of 270 rupees per share. Should they continue to hold or look to sell it for a one-year time period holding they have?
See, I think you can continue to hold on. Now, even though the stock has underperformed, we all know the reasons for that now, based on the kind of news flow the stock had shown. And that has been, the flavor of the stock, I think, since the last 6-7 months, back when the stock formed a high of 350 levels, and from there it's corrected very sharply. Now, the only, point which I believe is a bit, is not negative for ABFRL, is that the news is out of the, for the stock. And eventually it's settling into that range of 200 psychological strong levels of these round figure marks. They generally act as swing supports for stock prices, where they can absorb a lot of the news flows and then form a bottom for themselves. So I think at current levels, maybe the worst could be behind for the stock price, and possibly in the next 2 to 3 months, you could see a major bottom formation happening for ABFRL. So I would suggest a hold at current levels.
Okay, moving on to the next one. Saurabh, how does IEX looks to you for a long-term investing? Sandeep from Noida has 560 shares at a price of 204, currently at a loss. But what's your long-term outlook on the same?
The concern is primarily because of the valuation. The valuations are on the higher side. If you look at the volumes growth in the recent monthly update, we saw that the electricity volume hardly grew. I mean, some states are having serious problem with the debt on their. I mean, discoms have problems with their debt also. So I guess even if the volume grows, then also it is very difficult for the stock to perform because of the high valuation. It is better to get rid of the stock in case you find any upside.
Okay, Kunal, the next query that we have is from Vignesh, and this one is on PVR Inox. Is it a good time to buy this at the current levels?
Well, not a great fan of the stock, at least over the last 1 or 2 years. It's been an underperformer across the board, whether it's from the previous major highs of 2000 plus for PVR Inox, or whether even if it's at current levels of 1370, 1375. I think the trend has been quite consistent on the downside. So it doesn't look like a contra buy, at least at current levels, till the time the stock shows signs of confirmation. So it's okay to buy the stock maybe at a slight premium, but that could be a confirmation point that maybe the worst could be behind and the stock has started to get into an uptrend mode. I would suggest an avoid as of now.
Okay, moving on, and Saurabh, Satya wants a fundamental view on two counters. Firstly is IEH. He bought the shares at a price of 187, and the other one is Indian Hotels at a price of 300 rupees. Sitting at a good gains in both of these counters. So what's your view, and at what price he should actually look to exit both the names?
I think hotel sector is looking good to me. If you look at all the metrics of the major companies listed, they are all posting good numbers, good set of numbers. The occupancy rate is moving ahead, and they are getting higher revenue per room. Also, the expense ratio is, I mean, the expenses. They are able to cut down. The margins are improving. If you look from the perspective of 1 or 2 years, I think this sector is will remain hot. I mean, there is a clear uh, uh, I mean, they are on the advantage side in terms of demand and supply. So in my opinion, I think both these stocks, it makes sense to hold on to both these stocks, and I expect 20 to 30% kind of a gains further in a year's time.
Uh, Talking about the next query, and this one is a medium term query that we have, and it's on LIC Housing Finance. Subrata wants to buy this stock. Is it attractive now, given that today we saw a bit of a fall coming in the stock price as well? Would you suggest a buy for the medium term?
Well, I would not suggest a buy at current levels for LIC Housing. I think the stock has been a big underperformer with respect to most of the other peers in the sector. Now, today's fall could be exciting from a short-term play, but again, that this also doesn't indicate that the near-term bottom is in place. We look out for at least a 5 to 10% correction from a swing high, and that could probably happen if the stock comes back to say 350, 355 levels. So maybe another 15-20 rupees lower from current levels is where you can look to start nibbling in, even if you're a short-term trader. But specifically from a long-term play, I don't see any reason why you should be looking to buy the stock unless it shows signs of a confirmation that it's moving past into the uptrending mode, breaking past over the previous resistances, and then moving in line with the erstwhile performers from the entire pack. So as of now, avoid. If you're looking to buy from a short-term play, 355 or lower could be a better level to enter.
Okay, Kunal, the next question is from Hitesh and quite an interesting one. And he wants you to answer that at this point in time, should he enter Ethos, the stock which is falling after a bit of a disappointing set of numbers this time? And is that a current buy for Ethos at this point in time, or rather he should buy a watch and enjoy? And I'm adding one more question: he should buy the stock, earn some returns, and then buy a watch. What's your advice?
I think all three of them are good. Buy a watch and buy a stock, as well as you can buy the stock and enjoy buying a watch. All three of them are valid. Till the time you are buying a good business as such, as well as a good stock which is liquid enough. I think Ethos has shown a lot of consistency of price trend post the listing. The chart history is a bit limited for me to project it on a longer term basis, but the recent charts, the breakout for Ethos above that, I think 1400 mark. All of that it augurs quite well. Now, I think post results, if I'm not wrong, the stock had started to go into a correction. I think a couple of days back also, we received a query and mentioned that let the stock cool off post results at least another 5 to 10%. So maybe if it comes back towards 1100, 1150 kind of a zone, that's a better zone to buy Ethos from a longer term play.
Okay, well, let's move on and let's also shift focus to some of the earnings, wherein JK Papers reported its earnings this time around, and after a set of numbers being reported, we are seeing a bit of a cut coming in onto the stock price. Let's understand from the management itself what is the outlook going ahead and how do they see the industry trend shaping up. Onto the show, we have A.S. Mehta, who is the President and Director at JK Papers Limited. Hi, very good morning, Mr. Mehta, and thank you so much for joining us today on ET Now. Well, firstly, onto the show, let's talk about your realizations. There has been a good jump in this particular time that we have seen, but will realization growth sustain in the first half of FY24, as well as just wanted your take on the pricing that is seeing in the domestic market as well as the international markets?
See, some product categories, the NSR, it has started coming down. It has already happened in case of the coated paper as well as the packaging board. And I would say that the packaging board, the prices have come to a level which is not a sustainable level. So in fact, there must be some upward revision in the price of the packaging board, or in a very short term, I think the price level should be maintained. There would be no further drop. Maybe after 2-3 months, when the demand picks up, there should be a upward revision in the packaging board prices. As far as the coated paper is concerned, the prices have dropped in Q4 of the last fiscal year, and I won't say that there would be any significant drop or a major drop in the coated paper prices anymore. There may be some correction again, but it's not, very substantial. As far as the other uncoated paper, whether the office paper or printing paper, that's concerned, the demand has been strong, and there was no price drop as far as we are concerned. Yes, there was some minor correction by some mills, but we have not seen any price drop for this category. Going forward, I would say that this category may see some downward revision based on the global trend, because global pulp and paper prices have dropped. The pulp prices have already touched somewhere around $500 a ton, which last year it was hovering around $750 to $800 a ton. So that will also impact the printing paper and office paper prices in the Indian market. But since the demand is strong, robust, and there is no surplus capacity available in the country and no capacity is in pipeline, so I would say that the prices would remain more or less at that level, but maybe a minor correction in time to come.
Vinny joining in the conversation as well. I just want to talk about one thing is your packaging segment. How has that been performing? It had been performing well previously. What is the current scenario now? How is the capacity over there? And what is your client growth over there? What's the guidance that you could give us in terms of the packaging segment for FY24?
The packaging segment, as you rightly said, that the last year was a good year, but the Q4, we have seen some drop in the demand. And when there is a drop in demand, naturally there is a downward revision in the prices as well, because there is a fight in the market to capture the market. So there was some price drop. I would say that packaging board year as a whole, 23-24, I see a kind of a 9 to 10% growth in the year 23-24. And since there is no additional capacity which is likely to come, because our machine was the last machine last year we commissioned, so there won't be any major supply side the increase. So the existing capacity utilization of all the mills should further improve, and I mean that should meet the market demand. And also maybe after 3-4 months there must be some price correction northward in the packaging board.
Mr. Mehta, there could be some price correction onto the upside where the demand is staying strong is what we are hearing from you. But let's talk about the margins. There has been a sharp decline when it comes to the YOY comparison. And for as well as for FY23, if I see, that has been the highest margin being reported by the company in more than a decade now. So do you see the margins peaking right now, or going ahead you expect the momentum and the growth in the margins to continue?
See, the margin drop in Q4, what you have seen is predominantly because of the packaging board, where the demand was lower, and also the price drop happened, and also our the pulp prices were higher. Higher in the sense we imported the pulp, mechanical pulp for our packaging board at a higher prices of something around $900 a ton, and now the prices have come down. So hopefully next quarter, I mean, we have all started receiving the cheaper pulp for our packaging board. In fact, the prices have come down at a level of $600 a ton. And maybe next quarter, we would see further drop, maybe $500 or $550 a ton mechanical pulp. So once we have a cheaper pulp and price level maintaining at this point, and maybe minor correction plus upward, and also the demand picking up, I would say that the improvement in the margin for packaging board should happen. But at the same time, the writing and printing paper, it may not be maintained. So I would say that also it will depend on what kind of energy prices will remain. Some other input costs have certainly softened, the chemicals and some other commodities. So, I mean, the margin is going to be very, very, I would say that it's very volatile. So, I don't want to give any advice what kind of a margin is going to be in the next fiscal year.
Okay, Mr. Mehta, one point which I want to talk about is in terms of, the demand. Normally, Q4 is that seasonally strong quarter which comes in for the company. Do you think the demand is flattening now? What should we expect in terms of that? And, if you could just give us a market share guidance with that as well for FY24, what is it looking like?
See, as I said, that the office paper and the printing paper, the demand is going to be healthy. And I would certainly expect some kind of a 3 to 4% increase in the demand, or a growth, you can say. And the packaging board, I expect that there should be a growth of 9 to 10%. So overall, paper industry, I am seeing a growth of something around 6 to 7% again in 23-24 as well.
Okay, Mr. Mehta, we'll let you go on that. Thank you so much for joining us today on ET Now and helping with the take onto the growth outlook ahead. So that was the management of JK Papers, expecting the margins to be quite volatile going ahead, but the demand still remains strong. But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, it's once again time to take your stock queries. Stay tuned.
Welcome back, and you're watching Buy Now Sell Now on ET Now. Let's keep it going with all your stock related queries. Saurabh, this next one is from Suresh, and he's from Hyderabad. Wants to know your view on Kitex. They have 300 shares at 190 rupees per share. For a long term, should they continue to hold this or sell?
Won't be able to guide on this, not in coverage.
Kunal, do you have a view on this?
So nothing exciting on the charts, trading at 162. I think just recently the stock has bounced from 140 levels to 162, but then the correction, whether it's in 2022 or even prior to that, was quite steep for the stock. So I'm not sure what's the rationale of buying the stock from long-term play. I would suggest to avoid.
Okay, Saurabh, do you have a view on Gulf Oil Lubricants? Bharadwaj wants to know the outlook. He's looking to for a fresh investment in this one with an investment horizon for the next 3 to 5 years.
If you want to invest in this sector, better to be in the automobile space rather than the lubricant. I think Maruti or for that matter, Mahindra are looking good for from 1 year perspective.
Kunal, Jaya from Bangalore wants your view on L&T Technology Services. They are holding it at around 3,700 rupees. What's your view for both the short term as well as the long term on this one?
See, short-term wise, I think 3,900 seems to be a resistance for LTTS, and I think that's where, in case if the stock happens to bounce back to those levels, say in the next couple of days, that could be a good zone where you may look to book out profits. I'm not sure whether the long-term charts for LT Technology Services are anything exciting, because over the last 12 months, the stock has been consolidating into a 600, 700 point range, so 20% band approximately for L&T Technology Services. So short term wise, I think 3,900 could be a good zone where you may look to book profits and then reassess in case if the stock comes back to a correction.
Okay, moving on to the next query. The question is from Ajay Kumar, and Kunal, he wants to know your view on Redington, BOB as well as DLF. Any of the three would you recommend for a fresh buy at current levels?
So Reddington, I think if it comes back towards its 200 DMA, which is around 160 mark, could be attractive buy. Bank of Baroda also I think has been a good performer. So in case if the stock corrects in this phase of say a market risk off mode, then if it corrects and comes back to say 180 levels or slightly below, that could also be a good point for buying a Bank of Baroda. And DLF as well, I think on a correction say closer to 450 mark or slightly below that could also be a good level to buy.
Saurabh, Thomas George from Kochi is holding Cummins 100 shares at 1,216 rupees since September 2022. Should they continue to hold this or book out their profits? The time period to hold is 2 to 3 years. They're willing to hold it for that much time. What was your suggestion?
I think it is looking a promising story. If you look at the numbers, and the management is quite confident about it, and the whole capital goods sector is looking quite promising. So from long-term perspective, I think it is good to go.
Okay, Kunal, once again, a question from you. The question is from Hemant, and he's looking to invest 1 lakh of rupees for the next 3 to 6 months. Some of the stock names that he has in mind is Triveni Turbine, Raymond, Cummins, as well as Paytm. So, what's your advice? Any of these good buy at current levels?
Yeah, Triveni Turbine is good. Attractive charts, I think closer to 400, 390.95 is where the stock is trading. Cummins as well, I think, has been a consistent performer over the medium to long term, and I think the sector as well is quite attractive. So I think most of the stocks which you've highlighted looks attractive. They could be good buys at current levels.
Saurabh, Anil from Hyderabad wants your view on Rallis India. At current levels, is it the right time to start accumulating this stock?
History of the company, there is a lot of seasonality in the earnings. I mean, one time you'll see that the company is performing well. Another quarter you'll see a blip. The stock has hardly performed. I don't think so that it is a good buy for the portfolio for the investment. So my recommendation would be to avoid.
So White coming in on Rallis India after a good move. But moving on, Kunal, once again, the question is from Chandrasekhar, and he's holding shares of NCC, 2,000 shares. 1 month back, he entered at a price of 102. Is that a hold or book profits at this time?
See, current levels you can book out profits, but then I think you can look to re-enter in case if the stock corrects towards 100 mark back again. So my sense is that in this phase of the market correction, many of these mid-cap names which have risen up 30%, 40%, they could get into a 10-15% kind of a marginal correction. So maybe if the stock comes back towards 100, 105 odd mark, that could be a good zone where you may look to buy back again.
Okay, Saurabh, Akhil from Delhi wants your advice on any 2 names or stock names you could give from the mid to small cap category for a long term of 3 to 4 years. Possibly looking at doubling their money, but anything attractive that you're finding in the mid cap, small cap space?
I think in the mid cap space, I think any hotel stocks would be a better idea, like the Chalet In the capital goods sector, I think Wabag is another interesting idea. I think both these stocks are looking good from the investment point of view.
Moving on to the next query, and the next question is for you, Kunal. The question is from Neha from Mumbai, and she is holding 280 shares of Shoppers Stop at a price of 721, and currently at a mild loss this time around. So, what's your outlook on the apparel industries, as well as what should she do in the investments for Shoppers Stop?
So you can hold on to it as of now. It's an attractive chart confirming a breakout, fifth or sixth consecutive day of uptrend. The only concern is that, as I said, that in this phase of the market trend, it's possible that many of these stocks, they can get into a correction. So you can hold on to it if you are in from a medium term to long term play, because let the charts play out for the stock price. But if you're concerned about the market trend, then I think it makes sense to maybe exit the stock at current levels and wait out for a phase when the market completes its correction. If the stock is available back at a lower end, say sub 700 mark, that could be a good point where you may look to re-enter.
Saurabh, this next query is on Bajaj Finance, and the viewer is Vivek is holding Bajaj Finance at 6,500 rupees per share. They're holding it since almost a year. Should they look to sell and shift to something like an ICICI Bank or maybe an HCL Tech?
ICICI Bank can be a good idea, but if you look at the Bajaj Finance numbers, they are now posting good set of numbers. Earlier, the management wanted to consolidate its business, and that too in the COVID times. And now, in the last few quarters, they have again started their back journey on the growth path. But still, if you want to switch over from Bajaj Finance, I think ICICI Bank is a very good idea.
Okay, moving on to the next question, and the question is from Akshay and Kunal. He's looking to sell Bharti Airtel because currently what he has, Bharti Airtel, he is actually making a 50% profit. So, will that be a good bet to book profits in Bharti Airtel and make a switch to Infosys and Tata Communications? And he's a long-term investor.
So I think, the charts for Bharti, Infosys and Tata Communication are more or less similar, because Infosys is going through a struggling phase right now. Tata Communication as well is going through a bit of a struggle. Bharti Airtel, on the other hand, is going through a patch of consolidation about the 200 DMA. So I think 750, 800 has been the broad range for Bharti Airtel. So I'm not sure, what's the rationale of switching, whether it's the overweightedness in terms of one particular sector or not. But I think it makes sense to maybe stay put at the current levels, because look at it this way, that Bharti Airtel has been more of a consistent stock and low beta stock with respect to the overall market. So even if there is a phase of mild correction, Bharti Airtel can actually remain a bit more solid, as well as more consistent in terms of price trends as compared to the other two names. So as of now, stay put. Maybe over the next couple of weeks, you can take a call to churn the stock from Bharti to Infosys or Tata Communication.
Kunal, one more query your way, and this one is on Sequent Scientific as well as Happiest Minds. How are both these looking on the charts? Would it be attractive to start buying at current levels, or maybe wait for a bit? This query is from Sunny.
Wait for a bit. It's just 2-3 weeks of mild revival for these stocks, but they've not even confirmed a breakout of the previous swing highs for both of these names. So I would wait out for a confirmation. Would not be in a hurry to buy these names as of now.
Okay, not in a hurry to buy these names, and that includes Sequent Scientific as well. But with this, viewers, it's once again time to slip into a short break, but don't go anywhere. We'll be right back. Welcome back to Buy Now, Sell Now. As we go ahead, just take a look at what the markets are up to. They are trading at the day's lowest points. Nifty down about 103 odd points. Now have broken that 18,200 level as well. And when it comes to the Bank Nifty, here too we are seeing a cuts happening of over this time around at over 135 points of cuts is what Bank Nifty is managing to hold on. But let's move on and once again get back to your stock queries. And the next question that I have, Saurabh, is coming from Poonam, and she is currently holding 800 shares of Easy My Trip at a price of close to 47 rupees. What's the outlook and what should be the expectation on return?
Tourism business is going good, and my Trip has always posted good set of numbers. In the last year, they have surpassed their guidance too. I think one can hold on to this stock.
Kunal, Ramesh from Delhi has 300 shares of Aarti Industries at 660 rupees per share. Is it advisable to average at the current price?
Well, not exactly. I think the stock has been a consistent downtrending stock. Even the last 4 5 months, 4 5 weeks of price recovery from the March lows, the stock had not shown any major breakout for itself, and that's the consistency which I believe many stocks are lacking up. So I think it makes sense to hold on. Don't be too much in a hurry just because the stocks have corrected and now available at a steep discount. You have to wait out for a confirmation of the previous highs for the short-term charts to get into a stable mode. As of now, that's not seen to be the case for Aarti Industries, and that's why I would suggest an avoid.
Okay, Saurabh, the next question is from Pradeep, and he's currently holding two counters. Firstly is IGL. He entered at a price of 372 rupees, and the other one is 50 shares of MTAR Technologies at a price of 1450 rupees. What's the outlook on both of these counters? Should he continue to hold on?
There's a bit of disappointment in the earnings pertaining to the IGL, but from the long-term perspective, I think both MTAR and the IGL, if you have long-term perspective, then you can hold on to both the stocks.
Okay, let's move on to the next query, and this one, Kunal, is on PNC Infra. Chandrasekharan from Chennai wants to know, is it a good time to start entering a PNC Infra for the short term? And if no, then any alternate player that you would suggest for this for the short term?
Yeah, I looked at the charts for PNC Infra, and I think in the last 1 week, the stock has completed a flag pattern breakout, a rounding bottom pattern breakout for itself. So you can look to buy. The only concern is with the stop loss for the stock, which could be a bit steep at current levels. So I think 300, 302 could be a stop loss which you can keep for the trade. And on the upside, if this move is a bit more consistent, then I believe the stock can even head towards 348, 350 mark. So that could be a target range potentially, which you can keep for PNC Infra.
Okay, Saurabh, what's your outlook on NBCC? TRR Rao is holding 1500 shares at a price of 38 rupees 50 paise. So currently at a mild profits in this one. Should he continue to hold on or rather make a switch? And he is looking out to make a switch in Hootco. So what's your advice on that?
I think they have a very good order book and that gives good revenue visibility over the next 2 3 years. And the raw material cost is also cooling off, which may now push on on the margin front also. So I am expecting profitability to get boosted in this current fiscal, and the execution is enough for the company to make good growth. So order book is healthy. So in my sense, I think you can hold on to the NBCC.
Kunal, this next query is from Suresh, and they are holding 10 shares of Maruti at 9,440 rupees. What's your opinion on this one? Should they continue to hold the stock, average, or sell?
Yeah, continue to hold on. As of now, it seems like Maruti or the worst could be behind the stock price. The recent charts have been quite strong. The stock has broken past about the previous resistance. I think there were two resistance for Maruti, 8,800 as well as 9,000 mark. Both of those levels have been taken out, which means that there could be a possibility that this uptrend can sustain for Maruti. I would suggest a hold.
Okay, Kunal, what's your outlook on Sham Metallic? Shankar is holding 200 shares from a price of 292 rupees. Should he continue to hold on? But given the underperformance of this of the counter, would you recommend a switch?
See, I would recommend a switch, and I think it makes sense to maybe switch if the stock comes closer to the 300, 310 mark. I think 2 days back or 3 days back, that was the level where the stock took double resistance for itself. So I think 305, 10 levels could be a good level where you will look to exit as well as switch to a formidable large cap name.
Okay. Moving on to the next query, and this is from Captain D. Madhusudan. Saurabh, they are holding Avenue Supermart 274 shares since its IPO. What should they be doing with this one? Continue to hold or maybe look to sell now?
I think company is finding very difficult to put growth on the back to come back on the growth path. If you look at the same store sales numbers or even the sales per square feet, I think all these matrices are going down. And furthermore, add to it, I think on the valuation front, it is also not giving comfort, and the growth is also not coming up. I think it is better to take profits from the table. My advice would be to exit from this stock.
Okay, Saurabh, Kunal has already given his take on Shoppers Stop, but Krish wants to know the outlook on Trent. He's holding 50 shares at a price of 1400 rupees. So how is the long-term outlook for Trent?
I think if you look at the growth chart, the company is performing well. They are making all the efforts to put their brand brands and to make awareness, and the growth is also coming very good from these stores. So in my sense, from the long term perspective, it makes sense to hold trend.
Kunal, R. Dubey from London wants to know that can they buy Credit Access Grameen and G Shipping at the current price?
Trade Access Grameen, I think the stock has run up to 1150-55, steep uptrend for the stock, but I think it could be a good buy on dips candidate. Starting maybe at current levels, but then keep your quantity a bit more lower at current levels because of the steep uptrend the stock has gotten into. I think there could be better opportunities to buy the stock on dips. G Shipping, on the other hand, the stock has gone through a 2-day or 3-day of correction, so I think it's come back towards 700 mark after rallying towards 740, 742 levels 2 days back. So again, a good level where you can look to start entering, but as I said, that it's possible that these stocks can go into a further leg of correction. So buy on dips could be a better strategy for both of these names.
Okay, Saurabh, what's your outlook on 3 counters, Grimel Norton, Fiam Industries, Ion Exchange? Any of the 3 would you recommend for a fresh buy at this time? The question is from Mahalakshmi.
Apart from Ion Exchange, I think both these stocks can be bought in a staggered manner from the long-term perspective.
Okay, Kunal, the next query, this one is from Rahul from Toronto, and they want to know on Minda Corp or HG Infra, any of them looking attractive for a short term to buy?
I haven't looked at the charts for both of them, so I think Minda Corp I would suggest an avoid. The stock is forming actually a distribution pattern at current levels of 260 approximately. So that's a zone where I would suggest that not a good entry point for the same. And same would be the case with HG Infra. The stock has closed a up gap for itself. So maybe it should come back below that 900 mark. That could be a better level to buy.
Okay, moving on, and it's time to kickstart taking all your stock queries in the rapid fire session. And the first question that I have, Kunal, is coming from Jay Krishnan. He's holding 125 shares of Deepak Nitrite at a price of 2,164 rupees. Should he continue to hold on? Can this counter give a breakout or rather make a switch?
Hold is what I would recommend.
Saurabh, Rahul from Mumbai wants to know Vedanta, is it looking attractive to buy at the current price?
It is to avoid.
Okay, Kunal, what's your view on M&M Finance? The viewer didn't share his name, but he is holding 240 shares, 3,000 shares rather, at a price of 240 rupees.
I think good time to book out partial profits at least on M&M Finance.
Saurabh, we have Krishnan who wants to know at the current price for the next 2 to 3 years, is it good to buy more ITC? They're already holding ITC at 258 rupees per share.
I think better to diversify, put money in the private sector bank. ICICI Bank may be a good choice.
Okay, Saurabh, what's your outlook on Laurus Lab? Padma from Hyderabad is holding shares from a price of 580 rupees. Continue to hold on or exit?
I think not best of the time to buy the pharma and that to Laurus Lab. Avoid it.
Kunal, Ramamurthy from Bahrain wants to know in terms of Deepak Fertilizers, they're making a loss of 24% currently. Should they look to average or maybe completely exit the stock and look to buy a Tata Motors?
So just hold on to the stock as of now. No need to average or exit.
Okay, Saurabh, Swati wants to know how the chart's looking like for Polyplex Corporation. What should she do, and any targets that she should keep in mind for this one?
I think packaging industry is struggling and so is the Polyplex. Better to avoid.
Kunal, Tina Rubber, do you have a view on this one? Akshay from Dubai is holding 500 shares at 535 rupees. Hold or sell?
Not really, don't track the stock.
Okay, Kunal, Anand is holding 3,500 shares of Lemon Tree and making a 15% profit. Should he book profits at this time or hold on?
Yeah, I think good time to book our profits.
Okay, that was the last query for today on Rapid Fire as well as on the show of Buy Now Sell Now today. Thank you so much, Kunal, as well as Saurabh for joining in with us this morning. And viewers, it's a goodbye from Shrishti, myself, as well as the team who put this show together. But don't go anywhere. Markets are new. We'll take traction forward.